Hello everyone and welcome to this week's edition of Markets in a Minute. Mortgage rates are continuing to edge down. As of June 10th, the average 30-year fixed rate is about 6.85%, a modest but meaningful dip from last week's 6.89%. And great news for buyers locking in today. On the inflation front, the core personal consumption expenditures index, this is what we talked about last week, but that rose just 0.1% in April, hitting a 4-year low and showing underlying pricing pressure is cooling. That said, new tariffs may push consumer prices higher this month. Headline inflation is expected to be around 2.5% year over year, with core consumer price inflation close to 2.9%. The Federal Reserve is likely to hold rates steady for now as it gauges the situation. Markets have been stable, with the S&P 500 rebounding from April's sell-off and sitting within a few points of its February record high, helped by better job data and hopeful trade developments. And finally, we're keeping an eye on proposed changes to Fannie Mae and Freddie Mac. If privatization moves ahead without secure guarantees, some economists warn mortgage rates could rise up to a full percentage point, something that could make a noticeable difference for buyers. So that's your market update for this week. Stay tuned for more insights next Wednesday on Markets in a Minute.